Hey guys, BigT Trades here. Today I'll show you a trading strategy on the British pound to the Japanese yen, the forex pair. I will be using some ICT concepts and show you how I would trade this day. So it's Friday the 13th, which is the day before this recording. I didn't actually take this trade myself, but it's just a demonstration, and I will show you how I would think about it and how I would do everything in this day. So first of all, I will look for the bias, and my bias is that we are in a downtrend. If we look at this current market structure, we see that from the 9th to the 11th, we had some equal highs, and we finally broke below this market structure right here. And we are currently in a downtrend from the 11th here to now. So my daily bias would be that we are going down, and I'll be looking for some shorts if I see a break of some highs and some liquidity be taken out. And then I'll be looking for my ICT entry strategy, which consists of a sweep of a high. Then I'll be looking for a market structure shift, and then I will be looking for a return, and then I will be shorting. So let's get right into it. I'll be looking at the 1 minute time frame because it's easier to identify market structure shifts and etc. on the smaller time frames, and it's also where I do most of my entries. So my bias is that we are going down today, so I will be looking to sweep some of the highs like this one, or these, or this, or this, or this. You know what I mean. So when we have swept some highs and we see a market structure shift, then I'll be looking for a short because we are in a downwards trend, if you know what I mean. So let's play it and see how it goes, and if we sweep some highs. We swept this high, and now we're doing a market structure shift, but I want to sweep some of the high highs like these two here, and then I'll be looking for an entry. So this is a high we swept, but it's not significant enough for me to take the trade, so let's wait and see how it goes. And finally now, we swept this high, which is the rate. So we have our rate here. Let's see if we can take this out, or this out, or if we see a market structure shift, then I'll be looking for a short. No market structure shift yet. We didn't break this or this, so let's continue. And now we sweep a lot of highs right here. We swept all the highs prior, and we haven't had our market structure shift yet, so we have another rate. And we keep going up. We are about to take, I think we took them out. Yeah, we did, just by a bit. So we have rated 3 times now, and we are still looking for a short. So now we see a market structure shift here, and we took out this high. So maybe we'll look for an entry. I don't think this is significant enough. I need to break this or this for me to think about getting in. So let's wait. And now we broke this one, and we also broke this one, and now I can be thinking about taking the trade. So I'll be looking for a return up to this area, and the return can be 3 places, either at the fair value gap right here, our FEG fair value gap, or we can also look for the Fibonacci. So we take the high to the low, and then we look to enter in the premium zone when we are selling. So this zone above the 0.5 mark right here, I can draw it right here. So above this one, the 0.5 mark in our Fibonacci, we will look to get in above this one because we are selling in a premium. And we can also be looking for some order blocks, and this could be our little order block right here. So around this area is a very good sell in my opinion. So let's see how it goes, and if we can get a good trade, I'll be placing my short right above this 0.5 level here. So let's say here, and then I'll be putting my stop loss right above the high of that candle, and now I'll be looking for some levels where I can take my profits. First level could be here, which gives a 0.95 return, which is not good in my opinion. So let's look for this level, which is at 1.92. This could be our take profit number one, TP1. And we could also drag it a bit more down and say this could be our take profit 2, right around here. Take profit 2, and our take profit 3 could be at the lows of these two, so let's mark them. Take profit 3, which is our last take profit, and on this we get a 3.58 return on the TP2, and on the last one here we get a 4.442. Yes, 4.42. Yes, yeah. Okay, yeah. Let's see if we get up to the fair value gap and then go down. And we got filled. Let's hope we don't make new higher highs and break the structure again and go higher. So let's hope it goes down. We hit the TP1 here. This would be my first profit take, which would be around 50% of my position. I'll go out to the 5-minute, 3-minute time frame, just so it's easier to see. And finally, now we broke the TP2, and I would take around 25 or 30% out here, maybe 40 sometimes. So you have cleared most of your profits, and you can have your last small portion of your position at the TP3. That's just how I would do it. So let's see if we hit the TP3. And we hit it right there. So that would be the place where I would get out of the whole position. And yeah, basically, I hope you learned something new from this video. It was just a small example of how you could trade the British pound to the Japanese yen by looking at the daily bias and seeing where the market is heading. And we could see we were in quite a huge downtrend from the 11th to now, and that we would probably go lower. So I was looking for shorts, not longs. We could possibly also have long right here, but I don't like longing in a market that's currently trending down. So I was looking for the shorts. Yeah, thank you for watching. It was BigT Trades here. Subscribe, like, and bye.